The sovereign debt worries that we've seen in the Eurozone, as well as budget deficit issues here and the threat of QE3, around the corner, seems to be acting like a weight around the neck of the greenback.
Oh, yeah. Greenback is the dollar is going to keep losing value. The Fed is in a position where the only way to defend the dollar is to raise rates and to stop buying treasuries or, in fact, sell treasuries. And that's the one thing that they won't do. Because, as I said, they don't want to pull the plug on this economy, even if that's the right thing to do in the long run, because we have a phony economy that is sucking the real life out of our economy. But in the meantime, it creates the illusion of prosperity as we're spending all the borrowed and printed money. I don't see any kind of change coming in Fed policy. So the dollar's going to keep falling. See, the problem is, I was watching CNBC today, and their economist there, Steve Leisman, was trying to say that, oil prices are not rising because of the weak dollar, and that's wrong. That's why they're rising. And his proof was that he said, the dollar's down 10%, and he's measuring against other currencies, but oil prices are up a lot more than 10%. Well, of course, because what Steve Leisman doesn't grasp is that the dollar is not the only currency losing value. All currencies are losing value because monetary policy is too loose everywhere. It's just that the dollar has lost 10% less value than those currencies that he was looking at, but they've all lost value. And the best way to see the loss of the dollar's value is to look at gold or look at silver or even look at other commodities. And that is the loss of value of the dollar, not just how the dollar is doing versus other fiat currencies that are also being debased and losing value.
Well, let's talk about the recent Moody's downgrade of the U.S. bonds, U.S. debt, our treasuries here, from stable to negative. They used to be considered, the Treasury, as safe as money in the bank.
Well, the thing is, they're still AAA, that's so disingenuous, because why didn't S&P put a negative outlook on treasuries years ago when the budget began to deteriorate? I mean, they waited so long, and then they say, hey, we think there might be a problem, but we're still going to leave our AAA rating. I mean, that's complete nonsense. I mean, what are they going to do, wait a couple of years until the U.S. government is actually in default and then downgrade them from a AAA? Or wait until there's massive inflation? The thing is, given the concerns that S&P has over runaway debt, they should downgrade them right now. Because if you have all these concerns, why would you rate the securities AAA? I mean, AAA rating should be, we have no concerns at all. We're not worried in the least. We know that the U.S. government has complete control of its debts. If they're saying that they don't believe that we have the political will to deal with the long-term and intermediate-term structural debt problems, then downgrade right now. I mean, the whole thing is ridiculous. Now, if they downgraded it maybe to single A or A minus or something like that, then if Congress took action to make significant changes in its spending and taxing so that they now actually cut the deficit, then they could raise the rating back up. But how can you keep the AAA rating now? I mean, it's like a stock analyst who has a strong buy on a stock saying, well, I think there's a good chance that this company might go bankrupt. In fact, I think that they're probably going to go bankrupt. But there's a chance that they might not, so I'm going to leave it as a strong buy. No, I mean you downgrade it. Only if they address the concerns that you had, so that you no longer thought bankruptcy was a possibility, then you might put a buy on the stock. But how can you recommend a stock that you think might go bankrupt? And basically, what Standard & Poor's is saying is, we think that the U.S. government, might not be able to pay back its debts. Either they're going to default or they're going to inflate. But either way, the people who lend the U.S. government money are not going to get everything back in terms of real purchasing power. If that is your opinion, then how do you leave them as a AAA? I think it's a farce.
Exactly, and there were several prominent articles that pointed out ratings were quite similar, not just Moody's, but S&P and several other of the rating agencies, Enron and Fannie and Freddie Mac, all of these to the bottom. I mean, from, $60, $50, $40, $30 down to penny stock status, and they still had AAA status.
Yeah, I don't know why these agencies have any credibility left. I mean, they certainly don't have any credibility with me, and I'm not sure how many people care. I mean, the only reason that I think they're in business now is because certain funds and government entities, when they buy bonds into their portfolios, they're required to have certain ratings on the bonds that they buy, and the only acceptable agencies that can legally rate bonds are S&P and Moody's, and so a lot of people use them because legally they have no other choice. They're required to buy securities that have been rated. But beyond that, why anybody would pay attention to them? And that's the real problem. What we need to do is to open it up to competition so that other companies can offer their services so that they can rate securities in competition with these government licensed rating agencies that are doing such a horrible job.
Very good. Well, Peter, could you tell folks a bit more about the services that you provide at Euro Pacific Capital and how they can reach you?
First of all, I got my own radio show now, the Peter Schiff Show. I do it 5 days a week. It's on schiffradio.com if you want to hear it, SCHIFFradio.com, from 10 a.m. to noon Eastern Time, Monday through Friday. We are trying to get the show syndicated on radio stations, so if you're in an area where there's a conservative talk show network and you think they should have me on, give them a call and give them the heads up about the Peter Schiff Show. But definitely listen to it. We take calls. Good show, very entertaining, and it's 5 days a week. Then in my investments, Euro Pacific Capital is the brokerage firm that I have, and we offer individual accounts, brokerage accounts, managed accounts, individually separately managed accounts. We have mutual funds, a whole sort of investment for people can look at, and the focus is protect wealth from a declining U.S. dollar and a deteriorating U.S. economy, and trying to benefit from the better choices that are being made abroad and the wealth that is being created outside the United States. So a lot of opportunity. I've also got Euro Pacific Precious Metals, which is my metals company that exclusively sells physical gold and silver. And, so if you want to take possession of gold and silver, which is good to do, you can deal with my metals company. And, of course, my books, Crash Proof 2.0, good book to buy, How an Economy Grows and Why It Crashes, The Little Book of Bull Moves. Those are the 3 books that are out there. I recommend, and I'm working on a 4th book now, but it won't be out for over a year, maybe a year and a half.
Very good. Well, sir, we always appreciate your thoughts. Wish you a very safe and profitable week ahead.
Hey, you too. Thanks for having me on. Bye-bye.